What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY and we're also going to talk about some stocks that we're watching for the week. We're going to give you levels and price targets for all the stocks that we're going to go over. These stocks include stocks like Apple, NEO, Shopify, MMM, and Amazon. All of these stocks we're bullish on, but we're going to give you both bullish and bearish levels. That way you can trade them properly for the week and the months ahead. So we're going to first start off by talking about SPY, which is the S&P 500 ETF. The reason why we always like to go over SPY is because it gives us a general idea of what the market is doing right now. Stocks are generally held within the S&P 500, so most stocks that you're trading are part of that index. So as the index goes up and down, the stocks within it also usually move in the same direction, especially in a bearish market. This week, we are expecting a very important report, which is the CPI report. This report will update us on inflation, which, as you know, inflation has been the biggest battle in the United States economy for the last year or so. So, this report will give us an update on how inflation is doing and will likely send us in a very strong direction. We don't know which direction that is. This is why we're giving you these levels. That way, you can be prepared for that report on Thursday. So, let's go ahead and get started with talking about the macro picture on SPY. So we always like to zoom out and see what the overall trend is doing. We like to start with the weekly candles, and on the weekly candles we can see that last week we finally climbed back above one of our 10 and 20-day moving averages. So you can see that that purple line is going to be my slow average, which is the 20-day moving average. So for the last 20 days, the stock market has been trading at 385.43. And finally, after last week's development, we broke above that average and we closed above it. So going into this week, your goal is to figure out if the market's weekly candle is going to open above the 10-day moving average, and is it going to close above that point by Friday. If it does close above that point, that means we can begin expecting the market to potentially move back towards 400 to 404. But let's talk about the shorter term time frame, because the weekly time frame gives us the macro picture, but if you're a day trader or a shorter term trader, then you're going to need to know what's happening in the micro picture too. We're going to look at the daily candles, which is slightly shorter than the weekly candles, where we can see that the daily candle is still potentially forming that bearish flag. We saw a strong sell-off and then consolidation to the right of it. Last Friday gave us a little bit of a boost after the unemployment report came in. Now, unemployment did show a little bit of improvement. However, wage growth slowed down a little bit compared to inflation, which was technically good news, because if wage growth slows down, that means so does spending power for consumers. So they may not spend as much, therefore contributing to the inflation cooling. So if we are looking at the technicals and we're looking at the hourly time frame now, we are looking at a rejection of 390. So we can see that Friday we got rejected right at 390 and began moving back down, and that happened in post-market. 390 happens to be a place in which we were consolidating for weeks before we broke below it and have been consolidating below it since. So bulls have been accumulating and slowly buying it up, hoping that we can break back above 390 in order for us to move to a price target of 395. So if you are looking at SPY and you are looking for a breakout, you're going to need that breakout above 390, and this would be your first price target. If you are bearish on the market and you are looking to play the downside, you're going to need a break first below 384. This would be your first price target. But ultimately, we won't be very bearish until we break below 374.77, which is the lowest point in the last 2 to 3 weeks. So if we break below that point, that is likely going to happen potentially on a bad CPI report. So the CPI report will be coming out on Thursday, and that will happen before market. So personally, I would not swing anything into Thursday because of that CPI report, unless you are looking at long-term shares or very long-term expiration options. So if you're buying an option and it expires in 2, 3, 4 months, then it might be okay to swing something if you're very confident in it. So if we do break below 374.40 on that report, then we can expect ourselves to begin falling down towards that 368 to 370 level. Now let's switch gears a little bit, and now let's talk about some of the stocks that we're watching for the week, which first it's going to be Apple. So this is the stock market sweetheart. Everybody knows that Apple is pretty much one of the favorite companies out there for most traders. If you are a Apple trader, you probably have been bored or a little disappointed for the last few months, because Apple has been returning a very negative return for the last 52 weeks now. However, it is looking like Apple may see a bounce soon. Is this going to be the final bounce? Is this going to be the final leg down? We still have to see what the market develops after the CPI report. However, we are expecting Apple to bounce in the short term, primarily because of China's reopening policy. So, as you know, China suddenly switched gears and they started reopening everything. And over the weekend, they announced that they're reopening their doors to tourists again, which means that more attention is going to go to China and potentially more factories will be opening up, therefore helping Apple's manufacturing woes that they've experienced over the last 12 months. So if you are an Apple trader or investor, we're going to look at the very short-term candles here. We're looking at the 5-minute candles, and we're only focused on the short term because the CPI report is right around the corner. So if you are bullish, you're going to need a breakout above 131. This would be your first price target. If you are bearish, this would be your first support to break, and this would be your first bearish price target. We are leaning more bullish than bearish on Apple, and we do expect it to climb towards 133.35. So we will be looking at an upside move potentially with a safe stop loss on our end. If we do get a positive CPI report, so a good one, and it boosts market higher, then you're going to want to see Apple break above that 20-day moving average on the daily candles to begin moving towards that 137.50 to 140 mark in the months ahead. So the next stock we're going to be looking at is going to be NIO, which is another Chinese company. We're looking at this not only because of China's reopening policy, but because NIO has been spending way too long down here, and it is a company that we see value in. So NIO created a double bottom pattern right around 950 last week. That means it bounced twice at the same place, which is technically a bullish pattern. With China's reopening, we do expect NIO to continue pushing up. We can see that Baba, which is another Chinese company, was rising all week last week, so NIO is expected to do the same. The reason why NIO declined on Friday is because Tesla announced that they would be lowering their price on 2 different models. Now, of course, NIO being an electric vehicle maker in China that's still trying to be profitable, they can't compete with Tesla's new pricing. However, we do expect that there's enough share to go around when it comes to electric vehicles because of the high demand that's taking place right now for them. So if you are looking to trade NIO, these are going to be the levels that we're focused on. We're going to first focus on a breakout above $11. If NIO can break above the 11 mark, which is the mark it got rejected at last week, we do expect the stock to move to a price target of $11.90 and a second price target of $12.25. If you are bearish on the stock, then you're going to need a break below 950. If the stock breaks below 950, we do expect a strong sell-off because that is a place where we saw a double bottom. So if that pattern is broken, then we can expect to see NIO fall to these price targets down here. The next company on our watch list is going to be Shopify. And the reason why we're watching Shopify is because the company set a new record for itself when it came to Cyber Monday and Black Friday sales. So even as the economy was slowing, Shopify still managed to set a record. But you can see that during those months, they did not really move that much higher, and they have been consolidating at somewhat the same range since their earnings. So we are expecting the company to go up, and these are the price targets that we have for it. We first need the company to break above 37.80, which is a strong resistance of theirs. Above that point, they can begin moving up to 39.50, and our second price target would be right around 42.70. If you are bearish on Shopify or you need a stop loss on a bullish position, then you can use these supports down here as potential price targets or stop losses. The next company on our watch list is going to be an industrial company that you don't really hear about that often. And this is a company that's been around for decades. However, they have been slept on for quite a while now. You can see that for the last 5 years, the company has slowly gone down. However, we do see an upside opportunity in Triple M, and the reason why is because of what they brought forth at the latest CES tech event. The company brought forth solutions for virtual reality, medical wearables, electric vehicles, and hybrid work, which are all considered to be a very large portion of our future. So this company may be old and forgotten, but their value could exponentially multiply with advancements that they're making. We do expect the company to begin seeing bullish buying almost all of 2023, but for the short term, these are the levels that we're focused on. First, we need the company to break above 125.50 in order for it to move to these price targets up here. Or, if you are bearish on the stock, you're going to need a break below 122.45 to a support of 120. Now we are leaning more bullish on the stock, so we'll likely take a bullish position and we'll use one of these supports as our stop loss points. This is a company that we're liking for most of the year, however, these are the short-term targets. Last but not least, this company you're probably all waiting for, this is Amazon. Amazon is a company that's also likely going to benefit from China's reopening policy. Remember that China does bring a lot of product over from Alibaba, which is primarily based in China, which means that as China reopens, Amazon is likely begin to see buyers again. Now on Friday, Amazon created this bullish engulfing pattern, which is a bullish pattern that's considered to be one of the stronger ones. So we are expecting Amazon to begin moving up and finally breaking away from this downtrend. Here are the levels that we're focused on when it comes to Amazon. We're going to first need a breakout above 87.65 for a price target of 90. If it moves below 81.40, however, it will be expected to sell off much further and likely dip into the 70s. We are leaning more bullish than bearish on Amazon, but this also will be related to how the CPI report rolls out on Thursday. So thank you guys so much for checking in. I appreciate your time. Don't forget to subscribe and give us a thumbs up.